G'day, it is Stefan Angelini from Angel Advisory here for another update on the 16th of February 2023. Today, we're talking about, is 2023 the same as the year 1994? There's a lot of similarities. We're going to talk about dividend traps, stock market optimism, and why the stock market might keep going up. I'm going to talk about some bank debt issues, clean energy, Elon Musk, and finally bird flu in Argentina. Now, if you're listening to this for the first time, just remember that this is just general information. It's not personal advice. If you want some personal advice, go and consult your licensed financial planner. If you think it's time for you to reassess your investments, then reach out to us at hello@angeladvisory.com.au. Now, let's get into it to try and bring you some value add to your day. Just letting you know that the Australian market was down pretty significantly yesterday, down 1.1%. That's a pretty big slide. So now it's down to where it was about 4 weeks ago. US stock market remained okay after they had stronger than expected retail sales data. So that means if there's resilience in spending, that means people are either working or the impact on interest rates isn't working quite that well, which means reserve banks might keep increasing rates. As we go into just assessing a few different things and assessing today versus 1994. So basically today, we've got the biggest interest rate increases we've ever had since 1994. The average range might be between 2 to 3 or 2 to 4%. So they've been increasing very fast since 1994, and it had the same sort of characteristics. So high cash levels and high offset accounts. There was high interest rates, high inflation, falling stock markets and bond markets altogether. So that's probably the best relative period. Now, if you look after 1994, stock markets were quite good in 1995, which gives us confidence going forward that 2022 did suck. So maybe 2023 is going to be okay. A bit of an update on Australia. So we have the highest offset accounts ever. They are at record levels, and they should be because people are about to come off their fixed rates quite significantly. Just looking at different, different analysis on stocks. If you are investing for dividend, you need to be careful of dividend traps. And I'll give you an example. Magellan, for example, has a declared 18.94% dividend yield. If you look on asx.com.au, that's what they're saying that the dividend yield is. Now, that is based on their dividend paid in August 2022, when their share price was about 50% higher than it is today, so at $14 as opposed to $9. So if it's advertising, it's got an 18.9% dividend yield, it's probably not going to pay that. It's probably not going to pay 18%. Most likely that they're going to cut their dividend. The dollar figure will drop, and therefore the percentage, as it currently stands, will drop. Now that flows important into ETFs, and ETFs that call themselves to be dividend focused. Some just have filters based on who's got the highest percentage dividend on the ASX, and that's what they buy. So just be very careful and make sure you know the ETFs that you're buying, especially if they are these high dividend paying ETFs. Look around why the stock market might continue to increase. There has been an article that $1.8 trillion is kept in savings for retail investors. Now, if that is savings because of the 2022 sell-offs in equity markets, it means that they might start renting the market again. And that was from FundStrat's Tom Lee, who said that in a Wednesday note. So fingers crossed that does keep going up, and people do start investing back into the stock market. It is a demand and supply game. So the more demand or more stocks being purchased, higher share prices will go. Because even if there's a stagnant supply, that means demand is higher and share prices go higher. Just so you know, Australian banks in March this year will need to start repaying the $188 billion they borrowed from the government. And what that might mean is you might see more bank issuances come out in the market, and they're trading at quite decent, yields to maturity. So the way these bank debts work is they'll give you an offer at a certain price, and they'll say they will give you the RBA cash rate plus a 1 or 2 or 3%, depending on the risk of that hybrid. So you might see a few of them come to the market. So if you're an income investor, they can be quite good given the current rate environment. For those of you in the ESG space, just be aware. So Concentrated Solar, who's an Australian firm, is listing on the New York Stock Exchange. Now, what's interesting is that a company founded by the world's largest onshore drilling company, oil drilling company, is now acquiring this Australian company and bringing it into their New York Stock Exchange listing because it's their green energy play. So you'll see a lot of these energy producers that have been in, dirty production, call it oil, coal, and things like that. They may be bringing in these newer, cleaner energy providers like solar power, just to clean up their balance sheet, because that's where a lot of the money is going, especially if you think that a lot of institutional money does have a a ban on investing into things that are not clean energy. And most, I think it's 20 to 30% of institutional investors are going anything that's carbon neutral is what they're investing in. If you're a fan of Elon Musk, and even if you're not a fan of Elon Musk, guess what? He's actually a good bloke. In the last, call it 6 months, he's donated probably $2 billion worth of Tesla stock to different charities. That's a pretty big deal. The Tesla stock has been rolling around quite a bit, but he's been giving it away. So $2 billion worth of stock has been donated to charities. So even if you don't like what he's about, even if you think he's a bit quirky, look, he's still a good bloke, and this proves it. So good on him. And finally, just a quick note that there has been a bird flu outbreak in Argentina. Argentina has been under massive issues as it is. Now a bird flu outbreak, and we know what pandemics do to the world. But let's just see where this takes us. So watch on. Have a great day. If you do have any questions, please reach out to hello@angeladvisory.com.au. I'll see you soon. Bye.